Quick disclaimer, these discussions are intended for education and informative purposes. They are not to be used as legal advice. Welcome to the 256. I'm JD, host of the 256 Investor Podcast. This is for both the seasoned investor building a portfolio of rental properties that wants to sharpen their skills and for the potential investor that needs to answer some questions and gain strategies to invest with confidence. We'll discuss all things investing, legal, tax planning, acquisitions, insurance, and of course, we'll discuss real life experiences with 256 investors. Whether you live in the 256 or invest from afar, this is for you. Welcome to the 256 Investor Podcast. I'm JD here this morning with Anthony Malone. How are you, Anthony?
I'm doing fine. Thank you, JD. Thanks for having me come in.
It's always good to see you. We've known each other for a long time.
Yeah.
Go ahead and tell everybody what you do for a living and how long you've been doing it.
Okay. Well, I am a banker. I've been doing commercial loans for 35 years. Well versed in all types of lending, from C&I lending, commercial real estate, ag lending, SBA lending. But what I do primarily these days is commercial real estate loans, and which falls into investment properties, either single family or multifamily. So
yeah, you're not a Fannie Freddie guy.
not a
It's
Fannie
off the
Freddie
beaten
guy.
path. If you're a conventional loan person, you're not the guy to call. But if
Exactly.
you need the unconventional thing,
Yeah.
get in touch with Anthony.
Yeah. And sometimes there's a misnomer that it's a single family, so you go that route. But no, typically when you do an investment property, you need a
Yeah,
bank
we'll
loan to
we'll
do
clear
that.
that up in
Okay.
this show, no doubt. So going back a little bit, you're a local guy, right?
Local guy, born and raised in Athens, and mostly worked in this market, Huntsville, Decatur market for most of my career.
Did you do anything before you were in banking?
No,
This is it.
I started banking right out of college. Went through a training program, learned to be a lender. Banking's evolved a lot since that point in time, but that's what I've always done, kind of ever since I was younger.
Yeah,
So,
okay. Did you study finance in college?
uh, well, some finance. My degree was actually in business administration,
Okay.
and like I said, when I got out, I saw work, and eventually, found work in the field, and been here ever since.
Okay. And you went to the University of Alabama, is that right?
I went to the University of Alabama.
All 4 years?
Well, 2 years I went to Calhoun, had a
Okay.
basketball scholarship,
Is that right?
so that
This
paid
is new
for.
to me.
Uh, I'm not saying I was good.
Good enough to get a
they had
scholarship.
they had a scholarship available at the end of August. I was going anyway, and a friend of mine said, "Hey, go talk to Coach Shuttleworth." So
Well, there you go.
paid for 2 years of college and transferred to Alabama.
Okay. But so this has always kind of been your career path ever
Yeah,
since you were in school.
yeah,
You
ever
knew
since.
you'd be doing this. So, we've known each other for, I don't getting close to 15 years probably.
Yeah, yeah.
And I'll tell the story of how I met you. I came to town and already was an investor. I had a small portfolio and I was looking for somebody locally when I moved here. And I listened to a lot of speeches from people. I was with a brokerage at that time. And a guy came into a meeting one day and he really does what you do. And his sales pitch was, I answer my phone all the time. I will get back to you. If you reach out to me, you're going to get me. And he literally said, this was like a Michael Scott moment. He said, my greatest weakness is I answer my phone too much and I communicate too well. That was his greatest weakness. And I thought, this is exactly what I need. Because I'm eager and I was young and I was ready to keep the ball rolling. And for the life of me, I could not get in touch with this guy. I couldn't get him to return an email, a phone call, a text. I
Wow.
remember going to his company and sitting in the lobby and literally waiting for him to walk out of his office just so I could grab him and say, are you going to help me or not? Where I'm going with this is you've been the exact opposite of that guy. Ever since I've met you, you are the best at returning emails, phone calls, text. I don't think 24 hours has gone by when I haven't reached out to you and I haven't heard back.
Well, banking is, we pretty much all offer the same products. It's the service that makes the
Absolutely.
difference. And I've always preached that as well, but I've always lived by what I said, because, we all have some sort of person that we deal business with that you can't get a hold of them. They don't return calls, whether it be a realtor or,
Right.
whatever they are. But, that's important to me. I can't always help you, but I'm there. I can talk to you. You can call me in the evening. You can call me on the weekend. Like I said, if it's a weekend, you may hear kids in the ball at the ball at the ball game that I'm sitting at. But I always talk to you, but I may not can help you then, but I can get on it first thing Monday morning.
And I mention that because you've been part of my network for a long time. And
Yeah,
I want to talk about the importance of networks, having a good team around you, because it's really easy to go shopping online and find somebody that has an eighth of a point better than you can give me, or
exactly.
a slight discount. Maybe it's a little bit cheaper, but boy, I can't reach out to them and get them like I can get you. And it's so important to develop a network and a team of people that you rely on, who may not be necessarily, it doesn't always come down to money. It comes down to who's going to treat you right and who's going to be loyal and who you're going to be talking to 15 years later.
Yeah.
And when I got started working with you, you recommended an attorney to me to close the deal, because again, I didn't know anybody here. And it's funny that that guy you recommended to me, I spent the last year talking to him on a weekly basis. We were doing some pretty significant work together.
Good.
So I've developed that network from the very beginning based on people that I know and trust, like you, and I'm still working with those people today. And I want
Sure.
everybody to know how important it is if you're an investor, especially if you're from out of town and you're growing a portfolio here in the 256. It's very important to have loyal people that you can depend on.
Exactly right. You have to build that network. Whether if you're out of town, find a good realtor. Find somebody that will stay in contact with you, that you can build a relationship that will help guide you to what you are actually looking for, and not just selling you a property.
Right.
And as you build that relationship, you have that trust, and also, just like I said, a banker is very important. Somebody that you can stay in contact with, that can answer your questions when you need them. And you may not actually need financing, but somebody can help advise you and steer you and explain to you from the bank's perspective, this is what we look at in this property, to help guide you, so the hurdles you need to overcome to when you go to a bank to be able to qualify for a loan.
Right.
In property management, geez, there are a lot of property managements. There
Yes.
are a lot of bad property managers.
Yes.
But
Everybody offers the service whether they've done it or not.
yes, and there, I would say there are a few very good ones, and there are a lot out there that we've had a ton of
Right.
investors come in, so there's been an increase in property managers, and unfortunately, some of them don't own up to expectations. So, and even when you're doing your properties, you need to find a handyman, a contractor, somebody that you can trust. Especially if you do multiple properties, you build that relationship, and they're loyal to you because they know you take care of them, and you'll provide work for them when you do have that. So, it is very important to build that network. And like I said, we've known each other for 15 years. You know, you can call me anytime. I'll call you
And
and
half the
ask you
time,
questions.
neither of
So
us are compensated for any part of it. It's just giving advice or
no,
giving a referral for we're just giving general advice and talking. There's no compensation involved half the time.
and I work for a community bank, People's Bank of Alabama. Uh, relationships very important, and we we want you to be successful, because if you're successful, we're
Absolutely.
successful, and it's a partnership. That's the way we look at our customers. Is we're a partner with you to help you accomplish your goals, and I can't say enough about it, because like you said, there are a lot of bankers. There's a lot of banks. Basically, we all offer the same thing, but it's the service that you do it, and the communication is very important to me. Is I may not can help you, but you can get a hold of me.
Sure. And you understand the lifetime value of a customer, not
Uh,
just a one transaction and I'll never see you again, but that's a
exactly,
person for life.
and I would say majority of my customers are people we build relationships and do business over and over and over again with.
Absolutely. Repeat customers.
Exactly, and they tell other people, and the same on the investor side. Build that network with investors. If you're new to the market, get involved. Find somebody that's been here a long time. I think there are investment groups that you
Oh,
can
yeah,
join.
absolutely.
Find the experienced guys. They're experienced because they've been successful. Mentor with one of those. You've done this a long time. You'd be a great person for somebody to, you know, get in touch with you and ask you questions, and you can help advise them on the pitfalls and issues that you're looking for in this market.
Yeah, it's not too hard to find. People who are really confident in what they do, they're not trying to hoard information or keep secrets to themselves. They're glad to tell people. If all you have to do is ask, and they're glad to give you information. There's plenty of people out there that can mentor like that.
And I see that, in the investment field. I don't know how many people. I'm not going to name any names, but there's people that, I mean, they're more than glad to help you out.
Right. You mentioned something a few minutes ago that was very important. You're not just a commercial in terms of a property that's 4 units or greater. You know,
Correct.
the definition of a commercial property. We've discussed this in previous shows that an investor, the first thing they want to do is create an LLC or a corporation
Mhm.
for some legal protection for themselves. They just don't want to deed properties in their name and keep it there forever. So that's an avenue where you can help out because unlike Fannie and Freddie, who cannot write loans in an LLC, give loans to an LLC, you can.
Exactly.
It,
Exactly. It is treated just like we would treat any commercial loan. And again, you
we're
mentioned the
talking about
LLC.
a single family detached
A
home, a
single
condo,
family detached
townhouse.
home is the purpose of what you're using the
Mhm.
property for. So yeah, you definitely. I've always advised people, and I have people come in. They may have two or three, and they're all in their name. And I'm
Mhm.
like, you
You need to
know,
fix this.
you need to fix this. I know a lawyer. He can help you. And because you do open yourself to a lot of
Right.
liability. Even if someone's just walking across your property and gets injured, trips and falls, you're opening your personal assets up to be vulnerable to a lawsuit.
And in certain stages in life, people can only go that route. I mean, sometimes it is easier to work with Fannie and Freddie, especially somebody who's living in a home and that's their intention is
Yes,
to get primary resident financing and then convert it to a rental property down the road. So a lot of times it makes sense that that person went conventional Fannie and
correct.
Freddie, but then at a certain point in an investor's life, it makes sense to just go ahead and purchase properties in the LLC or the corporation's
Correct.
name.
Yes, and that would you would also need another partner that we've kind of taught. Your group that you need to include. You know, have an account.
Hmm.
Have an accountant, have an attorney. They can tell you the legal aspects, and they can tell you what's the best way to structure. Do you need to be an LLC? Do you need to be an Inc? Do we need to file this under a Schedule A, or do you need to have a Schedule A? I mean, not Schedule S, an S corp for properties. They can advise you on what's more advantageous for your finances and your tax purposes. The Side note to that, talk to your banker as well, because unfortunately, a lot of general accountants, their job is limit your tax exposure.
Right.
Well, that's great. You're not paying as much tax, but by doing that, you're limiting your income and your revenue.
Right.
Well, your revenue's there, but your income, your net income, may not be where it needs to be for the bank to be able to approve you. And I've had to have that
Absolutely. Happens all
discussion
the time. Yes.
where the guy may have made X amount of money, but they're only showing that they actually netted $10,000.
Right.
Well, you can't get any kind of financing with
Right.
$10,000 income. So that again that goes in your group network, and I strongly advise to be able to do that.
Absolutely. And a lot of times when someone's investing and they're looking at loans,
Hmm.
it may be dictated by what the market is, what Fannie and Freddie, what rules and restrictions they have in place. Because at different times in my life, those haven't even been an option.
Correct.
For instance, they limited to an investor's portfolio to basically 4 homes. Like you can only have
Yes.
4 outstanding mortgages. So guess what? That wasn't an option for me. And someone who does what you do was the only route I could go.
Yeah.
So a lot of times things are dictated by what is allowed by Fannie and Freddie, what's federally allowed and
Correct.
restricted. And you can do things obviously that Fannie and Freddie will not do.
Correct.
You guys don't work in sync with each other.
Yeah, and that used to be always the case. You could not use Fannie and Freddie, and then they did allow certain products. And I would advise you, if you can do that, sometimes it may be the best fit for you because you can get a longer fixed term, and typically you'll get a Fannie or Freddie rate as opposed to our rates, which are based on usually the prime lending rate, which is you know affected by the feds.
Right.
So um, there are some downsides. We don't get too deep into the hole, but you're limited to so many properties, but then you have to have so much in reserves. Usually you have to have 6 months per property, and if you have a lot of properties, that's a significant amount of money you have to have
Right.
just sitting on the side, to be able to get those loans.
Yeah, and to note, it can be in cash or maybe an IRA,
Yeah,
401k. There are
yeah, there
instances where
is, yeah,
percentages of those funds can be
correct.
allowed to count as the reserves. So if someone is purchasing a single family residential property, they want to do it in their LLC, what's that process like when they come to you?
You know, get in contact with me. Give me your information. I'll ask you some questions as far as, what are you experienced? Is this your first time? If
Hmm.
so, that's fine. I will, I hate to say it, I'll hold your hand and we'll
Right.
do this together. There was a big craze 15 years ago. People were buying up HUD houses.
Hmm.
And I don't know if they took seminars or what they did, but it seemed like everybody who worked on Resident Arsenal wanted to be an investor.
Right.
So they were buying up houses. They didn't have a clue. So a lot of those people, and I still deal with them today. I still talk to them today, and we'll help you buy the house. We'll help you understand the process, what you need, how to qualify for a loan, what to look for, what areas to look for, and like I said, this goes to helping you be successful. And we will go through the steps as what I need as a banker as far as financials and other requirements that we need to get from you.
Right. They'll need to file an application, do a
Correct.
personal financial statement, and list
Yes.
their assets, liabilities, net worth, things like
Yes.
that. And then it's like any other loan. From that process, they'll have to get an appraisal,
Yes.
and
Yeah, you get your appraisal. Of course, you have your title work, and then you'll close the loan, and then your bank remain. Unlike Freddie or Fannie, where your loan is sold to an investor, it will stay with the bank, and
right,
you'll always have that relationship at the bank. So you
right,
can come to the bank, make your payments. You don't have to mail it off somewhere, and it may be sold 2 or 3 times.
sure,
Um, it all gets into just building that relationship with the bank. We're a relationship bank. you know, I want, I've always called myself, I wanted to be a, I wanted to bank you. I wanted to bank your kids,
right,
maybe your
right.
grandkids. I'm still around, you know, I want that long term,
Yeah,
I want, you know, so, building a relationship, not only just professional, but, on a personal level, I'll
that's
try
how
to do that.
insurance agencies were a long time
Exactly.
ago. They really made a point to work on the kids. They wanted the kids' policies too
Yeah.
when they became adults and
Yeah.
things like that. You don't see that much anymore.
Yeah, and I have that. I have people who's, that I've done business with for years, and their kids are wanting to buy something or get into the investment world, or start a business. But
Right.
I'm the person they go to, and then typically, I've hooked them up, and they've built them a network, where they have attorneys, they have them,
Yeah.
accountants.
You don't get that when you just go with the company that's on the basketball arena's floor or the football stadium. You're not going to get that same
uh,
service. You may not even close the deal.
well, we're not going to throw stones, but the bigger the bank, unfortunately, you kind of lose that personal touch.
Bigger the
While
bank and the more the
while the
advertising.
lender is there, it may be fine, but unfortunately, people don't generally stay at the same place. Now, I can't say a lot because I have changed different banks, but for different reasons. But unfortunately, that's part of the game. But now, I have changed, my customers know where I'm at, and it's not necessarily the bank; it's the person that you deal with, and they know that I'll take care of them.
I've had the most difficulty with the big name national banks that, again, you see them on the football stadium names.
Yeah,
Those have been some of the most disastrous encounters in my life with
sure,
lending.
sure. And it's the nature of the beast. The larger the bank you get, the tougher the regulations are and the oversight is.
Right.
So it makes it harder to do business. There's more red tape. It's not necessarily the person's problem. It's the institution's
Sure.
problem. It's the government's problem, because that's just the way it's designed. Is the bigger you get, they want to keep more tabs on you. But unfortunately, that puts a lot of stress and pressure, and it's not a lot of fun place to work. I've worked at a larger bank. You know, I, there's not enough money
Yeah.
for me to go back.
Right.
So,
That
uh,
says it all.
yeah, yeah.
Well, right now in summer 2025, what are underwriting guidelines like? Are things strict? Are they more loose than they have been in the past?
Well, they haven't changed a lot in the last few years. It's for the type of investments that we're talking about today, which is single to probably 1 to 4 family.
Hmm.
Maybe even 20 to 30 unit apartments. They're not too bad. They're standard criteria you have to meet. The biggest thing is, and I'll explain to you when we talk about it, this is what the bank looks at, is cash flow. Can you buy this property, make the repairs you have, and get the rents you need to meet the cash flow that the bank is required to get, which is a minimum of 1.2 times coverage. What I mean by that is 1.2 times coverage is one time it's going to pay for the loan, and then you should be able to get a minimum of at least 20% profit out of it. Okay. And that includes total expenses, not just the loan payment, but taxes and insurance.
Sure. PITI,
Yeah,
principal, interest, taxes,
yeah,
insurance.
and we figure that in. We also figure in percentage for repairs and maintenance and that sort
And
of thing.
vacancy.
And vacancy. So, and we actually do it. We actually base our approval on an 80% vacancy.
Okay. I was going to guess 75%.
Yeah,
So,
yeah. Well, it's 80% right now.
okay.
So, that so we figure them both full. If it's a one unit, it's either 100% or not. Okay, so we run those numbers just for regulators to have,
Right.
but we look at that coverage amount, and I know investors and realtors look a lot on cap rate and that sort of thing. It doesn't mean a lot to the banking side.
Okay.
It's the coverage, and it's not just that one project. You can kind of mitigate that the 1.2 times coverage with what we call a global cash flow. The global will take all sources of income. You may have a W-2 income, you have a job, but you own some rental houses.
Mm-hmm.
We'll take your personal income plus any business entity you have and the rents in those properties, and we'll put them together. So you might have a vacant house, but it might be offset by the ones that are renting and plus
Okay.
your W-2 income. So it's not always the property. It is when it's rented, it has to cover, but we keep in mind it's not always going to be. So that does help an investor out, and we do that from a small investor to a large company. If we look at the global
Sure.
cash flow.
So you got to know they can satisfy the debt
Exactly.
once they acquire the property. It can't be just as simple as they fell in love with a quad plex
Yes.
or something or a duplex, and you're going to look at the numbers and you're going to make sure they can actually satisfy
Exactly.
the debts where they stand
Exactly.
today.
Yeah, and the 80% rule, falls more with multifamily.
Right.
And it's kind of hard to still do 80% out of a quadplex.
Yeah.
But there was a trend there where people would buy them, live in one unit, and rent the other
Right.
three out, which not necessarily a bad idea. A lot of
It
people have
works.
done that, so it works. So, and if you're young and you don't have, you can live there, that's fine.
Yeah.
Um,
Most people have a small window to be able to pull that off.
Sure.
If you can do it, do it.
Yeah.
So is the process the same if you're going to a truly commercial loan, which is greater than 4 units, right?
Yes.
The process is still the same. You're going to still be looking at the same numbers for
The
underwriting
same
purposes?
numbers, correct. You still have most banks are I say a minimum of 1.2 times coverage. Some are 1.25 times. Now those are the minimums. Wait, if you're 2%, that's even better. Okay, but those are, you got to keep that in mind, because in the appreciation of properties we've had over the last 5 or 6 years here, well, go back further than that, because we've had investors that come in and it has driven the cost, the price of these properties up. It's gotten a little more difficult to be able to cash flow those properties because sometimes they overpay for them,
Mm-hmm.
and they do the work, but location is very key, and that's something you need to be mindful for when you are investing. The area that you're in, will this sustain the rents that you need to cover that expense? Unfortunately, in this market, that we've had such great growth, but there's still some areas that you may not get the rents per unit you need to cover that. And some people have, we're not going to go down the 1031 avenue.
No, do it if you want. We talk about it all the time.
Okay, well, the 1031 is when you sell a commercial property. You have a window, you can reinvest that without having to suffer huge tax consequences. Right. Okay, so people need to spend it, and they can't just spend part of it. They can't break it up. It gets complicated. Right. But typically, you put it in the one property, and they may pay full cash for a property, and and they may overpay, and you know, so you know they renovate the apartment or the house, and you know they fix it up and they rent. But unfortunately, it may be somewhere that you can't get the rent that you need to satisfy the cost on that, because you know sometimes they flip those,
Right.
and or they'll get them occupied, and they'll get them cash flowing, and then they'll flip them. But it's been a little more difficult than it has in the past.
Well, that's where it comes back to the importance of a network. If you're not here locally and you haven't been here a long time and understand
Correct.
areas that are going to sustain what the rents are and what the values are,
Sure.
you need to be working with people here that do know, that have been
Yes.
here and that do know what they're doing,
Yeah.
and they understand the predictions and how things are going to play out.
Yeah. You definitely, we mentioned location. You need to understand that location. Is it on the rise? Is it on the decline? You know,
Does
you
it
know,
have this little pocket where the values are booming, but we all
exactly.
know that they're not sustainable?
Exactly. Exactly. And you do have some investors that have fallen in that, and then they have trouble getting, if they have to exit, they're not able to sell it because the cash flow is not where the buyer can qualify for the loan.
Has insurance coverage been a problem as of late? I know you can't speak specifically to insurance issues other than, has it been difficult to find insurance companies that want to write policies for, say, bigger commercial policies?
I have not experienced that. I'm not saying it doesn't happen, but I have not had that issue.
Okay.
I know some states have had a major
Mhm.
issue. Florida has a major insurance issue
Right.
right now. I don't know that you've had that, seen that yourself, but I haven't personally seen that. I've been exposed to them being able to. Now, I have been seeing with the insurance premiums increasing, people are changing,
Right.
trying to find
Right.
a better
Right.
coverage
Absolutely.
because
People are
that
shopping around.
and that that obviously plays into your revenue from that property, because if you're paying, the taxes come out of your net profit. So um, well, not your net profit but your gross profit, but it affects your net profit. And also, we didn't mention flood zones. I mean, that's
Oh, yeah, that's a big one.
that's a big one, because we don't get a lot of changes in the flood zones, but
Right.
there was a few years ago they reassessed everybody, and there's a certain area in this town that people have a lot of investment properties, and all of a sudden they're having to pay that
Hmm.
premium, and the margins aren't great to begin with, but that's going to cut into it. So,
Absolutely. Yeah.
but again, that plays in. If you have a local contact, local network that you have that you can, if you're unfamiliar with the area, contact you,
Yeah.
and you can help advise them. Well, that's good. It's a good price, but these are the things you need to consider, because you got to account for and be able to price that into your loan.
It's a good thing this is a North Alabama real estate investor podcast and not Florida, because, like you said, they're in the news a lot.
They're a
With
disaster right now, and
it,
it's
it
not
is.
it's not really their fault. It's just everything's hitting at one time. You have natural disasters. You have the increase in population, and we're experiencing that here, because the more people you have, that does drive up property values, which then drives up insurance, and it drives up all across the board. And my house has been reassessed the last 3 years. I don't
Hmm.
like it.
Yep.
Now, I shouldn't complain because I know what other people in the country pay,
Right.
but I still don't like it.
We've been a little more stable than other parts of the
Sure.
country in regards to everything. I mean,
Yeah.
property values and insurance, we do not get affected like people do on the West Coast or Florida.
Well, that's what's driving so many people to come here, is because the cost of living is so much different.
Hmm.
We see it increasing. They're seeing it drastically lower from where they're coming
Right,
from.
right,
So, um, you know, nationally, our market values are still below national average, but I don't know for how long.
right.
But they are increasing.
Yeah. What are some pros and cons of dealing with lending today, just in general, when people come to you from both your side and the investor side?
Mhm. Um, as far as the lending aspect of it, or as
Yeah, is
the
there anything
investment
that's
property?
just difficult at this point? Is there anything that's difficult or
Well,
anything that's
we kind of touched on the property. I would say the bigger problem I have today is on multifamily is can you cash flow that property to the bank's requirements that the
Right.
Fed requires us to do? This is not something we pulled out of the air. This is
Sure.
something they say you have to set these
You don't have a choice on
parameters. We
this.
don't have a
Yeah.
choice in that. There are exceptions. You might can do a 1.1 times coverage. You're not doing anything under 1 times coverage, but there's situations that it may be that may be what it's cash flowing now, but once you improve the property, get the rents up because they may be under rented. And you can get that up
Yeah.
to 1.2. So there's a plan to get you there. So that is
But
possible
it
to
is a
happen.
disadvantage for both sides. I mean, obviously, the investor can't get what they need. You can't fulfill
Correct.
any obligations because you have obligations to meet federally.
Correct. Yes. Yeah. And we're in the business of making loans. It's not turning them down. So if we're turning them down, there's a legit reason why we're doing
Sure.
that. It's mainly because we're under regulations we have to meet certain criteria on the loan approval
Yeah.
process.
And the advantages of investing right now, it's the same as always. Huntsville's growing, Madison County's growing. We're
It is
expecting FBI people to come in sometime soon and
everything
possibly
you
Space
just said.
Command from Colorado Springs.
Everything you just said. We have people coming in. We don't have enough housing.
Right.
And
Even
again,
with all the building going on.
even with all the building going on, and even new housing, that really helped a lot of people who had existing housing because prices for existing houses skyrocketed way beyond the norm.
Right.
Okay, because people were paying as much per square footage for a existing house as a new house because
Right.
there was just no inventory and they're moving here, so they got to live somewhere.
Yeah.
But yeah, the biggest thing is like I said, the increase in value and making sure they're cash flow. That's what I run into probably the most
Okay.
is, the making sure that the property can sustain itself to the requirements of the bank.
Okay. And an investor probably shouldn't be jumping into something of that magnitude because we're probably talking like a greater than 4 unit
Yes.
property
Yes.
at that point, and that's not something they should be going in alone, especially if they're from out of state. Like you don't want to
Correct.
just see something online and go, "I want that." They need more help than that.
You need to contact someone local that can advise you. Again, all the things we've talked about as far as the location. Can you get the money you need out of this area? Because you and I know there's certain areas that I don't know.
Sure.
They are improving,
Right.
but I don't know that you can go from $400 or $500 a unit to $1,500 a unit. It's just not. I don't see it happening for a very long
Right.
time. But there's still the you know investing is a great mode of building wealth, and I definitely encourage it. I've seen a lot of people who've done very well. People who acquire and build portfolios and sell those portfolios and then decide to start over again. But it's just like any type of business. You want to buy low.
Yeah.
You want to get into the prop where it's important that you get into the property. You don't overpay for it. You assess, what's it going to cost to get it to where I want it to be? Am I going to flip this property? Am I going to rent this property? You got to make sure that, you figure that in. You figure in any kind of over cost that you unseen for cost. So, rule of thumb is, always think about budget 20% above what your estimate is because once you start renovating a building, you might find water damage, you might find termite damage. It happens, and so that's the important thing is to make sure you don't overspend and you're in a market and you have covered your bases for any potential additional costs that you have when you buy that property.
And because you mentioned the 1031 earlier, I'll go ahead and add to that.
Mm-hmm.
You can convert 1 to 2, 1 to 3.
Yeah.
I've done that twice in the last 5 years. I
Yeah, you
think
can.
I converted a 1 for 3 and then I did a 1 for 2. So
Yeah.
I sold 2 properties and got 5.
Yeah.
And that's a great vehicle to increase your portfolio.
Sure.
And I did get loans on some of those
Yes.
because you've got to max out what you sold to
Correct.
avoid any gains, to defer all the tax. You've got to max it out. And sometimes that involves picking up a small loan or financing 1 or 2 of the properties. So that's a great vehicle. I don't know how much of that you see, but if you don't see a lot of it, then people are missing out.
Okay. Yeah. Unfortunately, I don't see enough. I've seen it in some larger commercial, non-investment property. Well, they're investment properties, but they're not.
Right.
They're not residential, where they will split them up for different larger, office building or retail center or something. I do see it occasionally, but not as often as you probably should.
Okay. Well, for anybody who bought a house in 15 to 17 years ago in the recession, it's probably grown in value substantially. And if you can locate 2 to 3 good deals right now, which
Yeah.
there are some out there, inventory is a little bit higher than it has been.
Good.
Then it's a really good way for somebody to increase their portfolio, double, do a 1 for 2, 1 for 3, double or triple your portfolio.
Yeah. Yeah. That's an excellent idea.
Well, Anthony, I've really enjoyed it. Appreciate all the information. It's always good to see
My
you.
pleasure.
Tell everybody once again, how they can get in touch with you.
Again, Anthony Malone. I'm with People's Bank. I'll give you my number.
Do
It's 256-431-0666. Please don't read anything into the number. I've had it for a very long time.
Hesitated.
But I've done a lot of church loans, and I just like, don't worry, the devil won't answer. I don't know if somebody may disagree with that, but I've had that number for over 20 years, and it has followed me everywhere I go.
To keep it,
and you have it, and
it's a good conversation
to
starter
have.
too.
Sure.
Or a conversation ender. I'm not sure.
Oh, that's fine. But again, I'm at People's Bank. You can Google us and look up. But I work in the Huntsville office, and it's a great place to invest. If you're coming in from out of town, reach out to someone like Josh, and he can help you and guide you where to look, and how to structure your portfolio.
Appreciate it, Anthony. Anthony Malone, I'm JD. This is the 256 Investor Podcast. My time's up. I thank you for yours. This podcast is proudly sponsored by 256 Realty, investors helping investors. Big thanks to our production team at AVO Multimedia Services for producing, editing, and providing the music that brings this podcast to life. If you enjoyed this episode, be sure to subscribe or follow the podcast on YouTube, Spotify, Apple Podcasts, or whatever you please. We'd love it if you'd leave a comment, review, and rating. It helps us grow and continue to bring you valuable content. And of course, investors love to share good knowledge. If you enjoyed this episode, please share it with a friend who's ready to level up their investment game. To catch more episodes and video content, visit our YouTube channel at 256investor. Want to get in touch? Visit our website at 256realty.com. We'd love to hear from you. Until next time, keep investing wisely, and we'll catch you in the next episode.